Hey everybody, this is Tim. Just wanted to go over real quickly what's going on this week. It's a huge week in the market right now because the Fed is having their meeting right now, and they will have their press conference at the end of the meeting on Wednesday. And so, what they end up doing and what they say and the comments they make is going to make a huge difference. Right now, Powell is in for this meeting and at least next meeting. That could get extended depending on what happens with some of these hearings because he's under this investigation, and that could cause things to go longer if they have to wait for the investigation to be over before having Warsh become the new Fed chair. So we don't know what's going to happen with that yet, but we do know he's in for at least this meeting and the next meeting for sure. So anyway, I wanted to cover really quickly what the Fed is expected to do and how that's going to impact things moving forward, and then some of the other things going on in the market right now that will impact long-term mortgage rates, the housing market in general, and things like that. So anyway, let me just go ahead and break this down really quickly. But the Fed is expected right now that they're going to hold rates steady. They're not going to make any moves right now. The labor market has been struggling to some degree, which might lead people to believe they're going to have a rate drop at some point in the near future, but there's too much other stuff going on. There's a lot of uncertainty because of the war, because gas prices are higher and things like that. Gas prices higher leads to extra inflation, and when there's extra inflation, the Fed isn't going to move rates lower because that's one of their biggest concerns. So everybody believes they're going to leave rates the same and hold steady for now. And then what we have to look at is what comments they make at the Fed press conference Wednesday after the meeting is over. What comments will Powell make at that news conference? Because in the past, he's made some comments before that made the market go haywire, where he talks about, not making any reduction in rates over the next few months, or possibly he might say there might be a need for a rate hike if inflation persists due to the oil and stuff like that. And so whatever comments he makes is going to move the market, unless he just basically doesn't say anything of substance. Then the market probably won't move much, but usually his comments do move the market one way or another. And so that's something that we're going to have to look for on Wednesday. But outside of that, the other things that are happening right now is that oil prices, they have stabilized and come back down some, and that has helped the markets. Like if you look at today, I'm going to go ahead and pull it up on my screen here so that I can show what it looks like. And let's see here. So anyway, this should be coming up on the screen right now. But as you can see here is what the market looks like right now. We have gained 38 basis points today, which is really nice. We had lost so much over the past, 1, 2, 3, 4, 5, 6, 7, 8, 9. Over the last 10 business days, we had lost like 150 basis points or something like that. So to gain like 40 back today so far is very positive. I believe we're going to probably keep bouncing between the 200-day moving average, which is this blue line. We bounced off of it today. We're going to bounce off of it, and then we will probably maybe continue to go up and probably bounce off of this 100-day moving average and stay in between here until there's something that breaks. And by something that breaks, I mean if there's like an end to the war or something like that, that's going to allow us to break above this 100-day moving average and go higher, possibly even get above this 25-day moving average, which is this orange line here. There's also a 50-day moving average, which is the white line. So, we're going to break above both of those if and when the war ends, because that's going to be a huge positive. Gas prices will not only stabilize, but start to come back down. And that's going to allow us to move higher. So that's what I expect for now, is that we're going to probably stay in this range between these two moving averages, and not much is going to change between those two. But we've still got like another 60 basis points or so we can gain to get to this 100-day moving average. So I expect that we will probably be in better shape by the end of this week than we are right now. But like I said, Powell's comments on Wednesday can cause a lot of market volatility. If he makes some really negative comments, then we could bounce below this 200-day moving average, and then who knows where we'll be. The other part of that is if he makes some really positive comments, then we could bounce above. But he usually doesn't. He's not a very positive guy, so I don't expect that. The other thing too is when you look at what economists are predicting, they're predicting one rate cut this year, and I believe they're off on that. I believe we're going to see more than one rate cut. I believe we'll see at least 2, 3, possibly even 4 rate cuts this year. And that's because the labor market is struggling so badly that once this war is over and all these numbers come out as far as the labor market and how they're performing, I think they'll have to start making more aggressive cuts. And if that happens, we'll go up into this range at some point this year on the market. So that's my own personal belief. The other part of that too is at some point this year, Powell's going to be replaced by Warsh. Warsh wants rates to be lower. And so he's going to, I think, push for more rate cuts in the latter part of the year. And so I think we're going to see some more rate cuts in the latter part of the year. The other thing I wanted to cover really quickly too is that right now we are in a huge buyer's market. And the reason is because there's about 30 to 40% more homes for sale than there are buyers to buy them. Now, that being said, buyers are starting to come out of the woodwork this spring because rates are about 1% lower than a year ago. And so buyers are starting to come out of the woodwork this spring, especially first-time buyers, and they are wanting to get out there and purchase a home. And it's a great time to do it because prices haven't gone up much due to the supply and demand. And then also sellers are willing to negotiate both on price and on closing cost assistance. And that's huge for first-time buyers. If the seller's willing to pay their closing costs and then the buyers can get down payment assistance or gift funds or something like that. I've seen buyers who are able to get into a house as a first-time buyer with $200 or $300 out of pocket or something like that. So it's very possible. But anyway, those are the things that I wanted to cover really quickly as far as the markets, what's going on, and what we're kind of expecting moving forward with this rate environment that we're in right now. But once the war ends, that's the key. Once the war ends, and Trump has said that he wants this to be a short war, not a long war. We don't know what that means, but I believe what it means is that in order for him to sort of save face, they're going to have to at some point declare victory and pull out, and that's considering that Iran probably isn't going to just give in. It doesn't seem like. So they're going to have to try and declare victory, say that everything in Iran's been pretty much destroyed and they can't do anything, and then pull out. If and when that happens, that's when we're going to see a big move in the market in a positive direction, because we were moving positive. If you look at the trend, this trend line was going really well. We kept going, the bond kept going up, and the rates move in the opposite direction. So the 30-year bond kept going up into this level, and then when the war started, it plummeted, right? So as soon as that war ends, we should see a nice move higher to get above these levels. And so that's going to be the key right now, is what's going to happen when the war ends and how fast will it happen. I think you're looking at maybe, once the war ends, maybe 1 to 2 weeks for us to be in a better spot than we were prior to the war. But the longer the war lasts, the longer it's going to take us to get back above those levels, because there's going to be more damage. With the oil production and things like that, the longer the oil production is down, the longer it's going to take us to get back above this level. So anyway, those are the things that I wanted to cover really quickly. But for those people who are wanting to purchase a home as a first-time buyer, now's the time. Even though the rates have gone up a little bit, we're talking about 1/8 to 1/4%. But the key is that there are more homes for sale than buyers to buy them, and as a result you can get a better deal on the home, and you can get your closing costs covered in the transaction. And then once you get in there and the war ends, then you're going to see the rates drop even more, and that's going to cause more buyers on the market, and it's going to cause, due to that extra demand, it's going to cause the prices to go up more rapidly, and you're going to gain a bunch of equity if you get in before that happens. So that's the key right now, is trying to come up with as much equity as possible. See, we're at 39 right now in the basis points. This keeps going higher. We could be, well, we're almost the end of the day now, so it's probably going to be around 40 all in all by the end of the day, which is great. If we can gain 40 today and 40 tomorrow, that's going to put us up close to this. 100-day moving average. But that's what I wanted to cover here quickly. If you have any questions or anything, let me know. And for first-time buyers, if you want to go ahead and get pre-approved, simply go to timdial.com. If you go to timdial.com, complete the application, we can have you pre-approved within like 24 to 48 hours, and then you're going to be ready to start looking at homes at that point. Additionally, we do have a free mobile app, and you can download that at dialkeysteps.com. That's dial, D-I-A-L, keysteps.com. If you go there, install that free mobile app, it actually helps you build your credit score and helps you improve your credit score. And then additionally, it has a wonderful home search tool, and it's self-contained, so your information is not going to be sold to anyone if you start utilizing that app. But that's pretty much it. I hope you all have a great rest of your day, and I will probably do another one of these at some point, if not Wednesday, maybe Thursday or Friday after the Fed meeting, just to see how the Fed meeting ended up impacting things. And so stay in touch, stay tuned, go ahead and hit that subscribe button, and like I said, I'll be doing another update at the end of the week. I'll talk to you later.